All right, good afternoon, everybody. Event Trader here. Just going to do a walk around what we could be looking for next week. Certainly a pretty busy week as we start getting in towards the later part of the season and the holiday season, which usually leads to a little bit of a tailing off in activity, but certainly seems like a lot of people are trying to push stuff out next week ahead of Thanksgiving week, of course, and then the Christmas holiday New Year season that follows. But wanted to lay out some of the key themes and take a look at some of the different macro events and earners that we could be watching for next week. First off, starting off with Wednesday, Fed Chair Jerome Powell set to speak in Dallas. Obviously, no coincidence that a lot of this selling pressure picked up following the Fed minutes. A lot of concern about the Fed not being in touch, if you will, with the developments in the economy, just kind of looking at some of the historical data. So a lot of people were hoping for some sort of tip of the cap to some of the headwinds that are being presented, including trade, obviously the Italian budget concerns, and slowdowns that we've seen in the emerging growth areas, which kind of started off with the stronger dollar and debt load concerns there. But, there was none of that in the FOMC minutes. Certainly a little bit of a nod to the business investment spend weakening a little bit from strong levels. But we're going to want to see if Fed Chair Jerome Powell is seeing anything a little bit more nefarious there. I don't think he's going to want to upset the apple cart with the December rate hike. I do think that he will try to confirm that is on, but any hints towards 2019, waiting for a little bit more data or any nods to recent data showing a little bit of a weaker activity, then that could certainly be a positive for the markets, as I think the Fed policy concerns remains one of the headwinds in play here, certainly in the emerging markets too. We'll get into earnings here in a little bit, but first going to move over next to the sell-side shop conferences. Pretty busy session there, and I didn't repeat them up in the key themes, but you can see some of the different conferences and corporates that I was looking at here. We got a JP Morgan Financial Services Conference, Citigroup Financial Tech, Stifel's got a healthcare conference next week, Morgan Stanley at Global Chemicals. These are just some of the ones that I'd be looking at. That BofA Merrill Global Energy, particularly with the recent decline that we've seen in oil prices, could certainly be of interest, as will that JP Morgan Global TMT, which is telecommunication, media, and technology conferences. A couple of key investor days too. 3M. Obviously, that should be of great interest, and that FLR Investor Day, also for the industrials, could certainly be something that people will be watching closely. That'll be giving us a little bit more color on Q4, as we are now about halfway through Q4 and just getting to the end of the Q3 earnings season. China, a very key area next week. Obviously, in general, the second biggest economy on the globe, so they are always important, but there are a couple of notable items out from there for next week. Starting with economic data, over the weekend, we're going to be getting the money supply and new yuan loans. Tuesday night, we'll get that fixed investment assets, the industrial production, retail sales data out. That's always key drivers, and new home prices on Thursday. Collectively, once we get all this information, we'll have a fair idea of how the Chinese economy is progressing. The cynic in me always thinks that the Chinese data in particular, always a little tweaked by the government to some extent, and seeing as this will be the last round of Chinese economic data ahead of that G20 meeting where President Xi and Trump are expected to meet, I just have an inkling that this is going to be better than expected. I don't think Xi wants to go in there looking like a wounded animal. Some of the PMI numbers that we saw recently would point to a little bit of improving data, so that could go a long way with easing some of the concerns around the global economy. Following that up from China, some notable earners out there. We've already had most of the big ones, but Huya, Sina, Weibo, Baozun, they're all going to be reporting. And then finally on Sunday is Alibaba's 11.11 Global Shopping Festival, better known as Singles Day. And this is the world's largest online shopping day. Last year, Baba sold approximately 25 billion gross merchandise value of goods. So right now, the numbers that I've seen are looking for an increase of about 24 to 28% year over year on that. So the gross merchandise value for Baba should come in around that 31 to 32 billion range. This will obviously be a key tell on the Chinese consumer. JD is a secondary play off this if you're looking around. Personally, I'd love to see a little bit weaker data and a flush in Baba to start building a new position in it. But, obviously collectively between the Chinese economic data, the earners, and the Baba Singles Day, we're going to get a lot of information from China. Sticking in that region for next week, two key meetings and a lot of trade headline risk out there, both to the up and downside. So we got the Asian Summit and the APAC meetings that will pretty much be going on all week. This is a meeting between leaders in the regions, and they invite attendees from all over. President Trump will not be there, but Vice President Mike Pence will be, as well as a slew of U.S. trade representatives. Wilbur Ross would certainly be interested to see if he's going to be involved in this meeting. Obviously, talks today were of Trump perhaps going to a little bit more of a friendly free trade rep, such as Linda McMahon. So I want to keep an eye out to see who is going to be part of the U.S. Contingency that heads out there, and that could provide us a little bit of insight into any possible replacement for Mr. Ross at that position, assuming this even happens. But certainly seems like people are getting their heads around it as a possibility. And then finally, I got this listed last, but again, as I say in my comments, this shouldn't be taken as any sort of order of importance, because this could stand as the most important event next week. But Italy is supposed to return to the EU with their budget on Tuesday. The EU rejected this budget, and the reason being is the spending was far above what's allowed by the EU as a percentage of GDP. I think it was an increase to 2.7%, and there's a cap of 0.1%, so they're well above the usual ask from countries on this. It's more of a populist government, has been well documented, and they're basically pushing back on austerity measures. Now, what will be interesting is Chancellor Merkel has certainly seen her position domestically at home weakened with the recent results from the Hesse region and a couple other regional votes that have gone out where her party's lost significant power. So I think Italy might be looking to press the issue a little bit more, certainly on austerity in general, and try to find more of a common ground with the northern countries in the EU. But I don't think that Ms. Merkel's stance has been weakened because of anything on austerity measures. It certainly seems to be centered a lot more around some of her immigration policies where people have had contention with. So, it should be interesting to see how this plays out. But I do think that Italy is prepared for more pain in order to press this issue and try to bring back the austerity discussion that has basically just been kind of taken for granted the EU at this point. So that could certainly rattle markets, drive up Italian bond yields, and certainly hurt the euro as well. So that could stand as perhaps the biggest headwind for the markets next week. But as we could see collectively, a lot of data to process, a lot of headline potential. So definitely going to be a busy week, especially as people are starting to try to position their portfolios for the end of the year. Moving into each of these areas individually, taking a look at the U.S. macro. I already noted the Fed Chair Powell speaking on Wednesday. Also, a couple other items of interest on that front. The Thursday is particularly interesting for me. You got retail sales. You got two forward-looking sentiment numbers with the Empire and Philly Fed due out that day. And then we'll get a couple more Fed speakers, too, with Randy Quarles and ahead of the banking committee, and Neil Kashkari speaking as well. A couple other items of interest. The Fed's daily will be speaking. This will be their first comments. That's on Monday. Also of note, Monday bond markets will be closed. It's bank holiday for Veterans Day. Veterans Day is, of course, on that Sunday, but the bond markets will be closed on the Monday. So keep that in mind. Probably a little bit lighter volume to start off the week here. And then moving on to Tuesday, a couple more speakers with Kashkari again. Brainerd and Harker also speaking that day. Crude inventories are delayed a day. I do need to double check this, but with the bank holiday on Monday, I believe the API won't be out until Wednesday, and the EIA data won't be out until Thursday. Obviously, been seeing big builds there. And then finally, Friday, we got the industrial production and capacity utilization numbers, as well as Charles Evans, the Chicago Fed president, speaking on that day. Moving a quick look to the international here, we've already discussed the Chinese economic data. A couple other items of interest. On the sentiment front, the Eurozone and Germany zoo surveys are due out on Tuesday. That's also, that'll be in the morning time ahead of that Chinese economic data, and also ahead of the Italian budget decisions. Wednesday, a couple of Eurozone Q3 GDP preliminary numbers that'll certainly be of interest. Also, China new home prices that day. Thursday, the EU auto registration. Curious to see what comes out there. This data's been extremely weak as of late, but a lot of that's been due to the new emission standards that has slowed production and deliveries. So curious to see what happens here if we see a big bounce back. And also, Mexico has an interest rate decision that day as well. Not expected to move at the moment, but something to keep an eye out on. Finally, Friday, Eurozone CPI final numbers, so nothing of great interest on Friday. And then, of course, the conferences in corporate, I've already discussed a little bit with you. So now for the earnings front, I'm actually going to bring Scott in here, and we're going to take a brief look at some of these charts and try to prepare you for that. So let me see if he's ready to join us here.
I am ready to join you, Gav.
All right. Looks like we continue to get a bounce going into the close here. I was surprised, expected to see a little bit of a rollover, but certainly some buyers coming in at the end of the day, which I would guess say bodes well for the bulls. But like I was saying, there's a lot next week for people to digest, so should help with sentiment here.
Yeah, let's see. I don't know. The internals are horrible today. I mean, really favoring everything, saying this is a significant distribution day. The patterns that I see on the charts look like we're just slipping lower. We closed the gap from Wednesday. You have some short covering, obviously. We're really between a rock and a hard place right now, I think. With the rally in the market the last week and a half or so, this is the first day we're pulling back. It's going to be just a wait and see type of environment, I think, coming into next week, where you're just going to have to see which side takes control. There's plenty of resistance above, and you got some new support below, but really kind of just have to focus in on the sectors and the individual stocks themselves and go with that.
Well, I'm just looking, we're up now 20 off the lows here, as the SPY keeps...
What's that? Which vehicle?
December contracts for the E-minis and the S&P.
Okay.
That's what I'm looking at. Just getting a little extension here.
Mm-hmm.
Intraday, pretty impressive little rally back. I mean, we're nearly flat now on the day, right?
I wouldn't say it's impressive. This is Friday behavior.
Yeah.
We talked about this 3 hours ago, and then we talked about this an hour ago, and this is just the way the market works typically. You always see this short. I'm going to say it's more short covering. You know, shorts have had a pretty good week, last two sessions.
Take the headline risk out.
Yeah, why not lock in some profits here before the weekend? So.
All right, so let's take a look at some of these earnings, Scott. I mean, you know, we've talked a lot about the quality dying down a little bit, but next week actually there is some pretty good quality, and some of the highlights I think will be some key October end tech names. There's a few retailers that are going to start coming out ahead of that holiday season, and a couple of those fast-moving Chinese names. So for you, I think this is a nice week of earners just for potential, and I would think that scalp would be over a lot of these names too. So we'll have to see how some of these play out, but let's take a quick look at Huya. Huya, which I know has been a favorite of yours in the past. Yeah. Obviously, a long downward trajectory in this that really has not broken out of yet. Coming in towards that IPO pricing of 16, right?
Yep.
So you looking at anything on this? Obviously, probably something that's got to prove to you maybe getting back over the 22 to 24 area before you get excited.
That is exactly where I'm looking. Look at that downtrend over the last couple of months, and it's coming in right around the 50-day moving average. So if this thing can't get back above the 50-day moving average around 22, I'm not touching it. I haven't touched this stock since early summer. I mean, it was a fantastic run with IQ, I think was the other one, and Billy, Bili. They were fantastic runners in early June. But once the music stopped playing in these names around July and August, I haven't gotten near them.
Who knows, Scott? Maybe we got some good Chinese data and you could get the band back together on these. But another recent IPO that I've been watching, and you know, one of the problems that we have over here trying to cover pretty much every stock out there is you tend to get distracted, and this Eventbrite EB is a perfect example of it. I know one of our users had gotten in on it, so you know, kudos to them. Apologies to people for missing some of this, but this made a nice run, but it seems a little shaky to me, this parabolic run in this market.
Yeah, so you know, my IPO theory, pay attention to the initial opening range that gets established after the IPO makes its debut. So clearly we have lower end of that initial range that came out in late September, right around 30, let's go with $33 to $34, and then the high was about $39, $38. So a decent 6-point range there, 5-point range there, and we have price action getting right back up to that area, right around $34, which is probably, when are earnings? Monday after the close? Yeah,
Monday
so
after the close, correct.
Yeah, so for me, you're really going to have to see price action jump back over, say, $36 and maybe even get higher towards $38, $39 for me to get interested in this one.
All right, so let's take a look. Home builders have been one of the small pockets of strength, not today so much, but over the last week or two, I would say. Seems like some people are coming in, and with that, just want to note Beazer Home, BZH, and Home Depot, HD, which Scott, is that the largest component in the XHB?
Yeah.
Home Depot?
Yeah.
They're both going to be out. So Home Depot, you get the home builders and consumer sentiment in general. But let's take a look at HD here. I know this is one that you've played in the past a lot. You got any thoughts on HD here?
It was one of the stronger stocks throughout the entire summer, and just started to roll over real aggressive with the broader market throughout October, and that kind of accelerated the weakness that we saw in the ITB ETF, the home construction ETF, as well as the home builder ETF XHB to year-to-date lows. But this was the last one to fall. So it's kind of interesting to view it from that perspective. In late October, it did find support along the April lows around 170, and now it's looking like it's got some resistance just above there around 190 with the 200-day moving averages come into play. So going into earnings, I'd say it really has to get back above that 190 area, the 200-day moving averages, to really kind of get buyers back involved with it. Otherwise, it's looking like a pretty broken stock for now. I mean, it might have to go through some further consolidation and maybe some weakness in order to kind of stabilize a little bit better.
Okay, let's take a look at two of the marijuana names that are going to be out both on Tuesday afternoon. First is Canopy Growth Corp, CGC, of course. Been a big trading vehicle for the team here. Recently has been rolling over since the elections. A lot of sell the news coming in there. Scott, how are you looking at the CGC chart?
Tough call. It got rejected right at the 50-day moving averages on Wednesday's rally, and that kind of lined up with that late October breakdown below key support in the 45 to 46 area. So I'm going to have to go with the momentum on this one and just say that it's acting pretty poor here below the 45 to 46 area. That's going to be your key resistance going forward. Now, we can't deny the fact that it saw a strong rally off the 200-day moving average from late October, around $32 or so. If it gets back down to 32 and 200-day moving average, I wouldn't be surprised if it captures like a double bottom down there and you see some bids. But overall, like bigger picture, it's lost a lot of momentum, and it really needs to get back above the 50-day moving average around $45, $46 to really kind of spark some new initial hope amongst longs.
All right, and Tilray, pretty similar chart. It's got a 50-day that's been established now at this point, which it broke below, or just today actually, after spiking above it on Wednesday morning. So, obviously a pretty whippy name here, but similar chart to CGC. So where would you say the equivalents are, like 140 in that 90 area?
Yeah, 142 would be this week's high. So obviously, if it has a good earnings report on Tuesday afternoon, you can definitely see a squeeze. I'm sure the short interest in this one is through the roof too, right? It's my guess. I haven't looked at it in a while.
I haven't looked at them either.
Because none of these stocks are actual profitable top and bottom line, right?
Yeah, I mean it's funny because so about 5-6% short.
That's it? Really?
Yeah, I was just looking through because somebody was asking me about TRTC, and Tilray's revenue guidance for this quarter is 10.5 million. PYX actually had like 52 million in revs this quarter. So, and that's one of the reasons why I like TRTC compared to TLRY. Their revenues are the same, but obviously the Canadian exposure certainly helped a lot of these names find a bid. But I mean, they're legitimate companies. I mean, they're not earning money yet, for sure, but they do have revenue streams coming in. So it's not like Bitcoin, where somebody's just throwing Bitcoin in front of their name and they don't have any business. Some of the names that we're getting run up certainly have real estate. They have buildings. They have operation plants. So Tilray is a legitimate name.
Yeah.
The valuation, you could certainly argue.
Do you remember back around
390 price to sales certainly sticks out like a sore thumb. But
do you remember a conversation back around Labor Day, after Labor Day, about all the marijuana stocks?
That they would look like the Bitcoin stocks by the
the craze and the mentality that was going on right into early September, right around Labor Day, was very similar to what we saw back in November, December with that Bitcoin mentality. Not on a smaller scale a little bit, but it just seemed like everybody was talking about marijuana stocks all the way into September around the Labor Day weekend. And we both sat there and said, I doubt this is going to last into year end. We're like, this maybe lasts a few more weeks, maybe less. And sure enough, these things are probably just going to roll right back over. And that's what every one of these stocks are doing right now. So there's earnings reports coming out. My guess is that, yeah.
Just a quick jump in here. We'll see how much legs this bounce has. I've just seen a tweet from President Trump saying Arizona's signatures don't match, electoral corruption, call for a new election, ? We must protect our democracy. I'm not 100% sure what that's about, but just wanted to give people the heads up in case we start seeing some selling pressure come in here.
But anyway, I think with a lot of these earnings reports in the marijuana stocks, I think you're not going to see a lot of improvement, and they're probably going to gap these stocks down. But then you're going to see buyers just step up because there's such a big, seems to be a big wave of people willing to step in, defend, and average down on these names. So just be careful with that.
Okay, let's take a look at Canadian Goose, GOOS. I know this was one that you were interested in taking a look at, but they had actually, they hadn't delayed it, but they don't usually provide their earnings date until a couple of days before. So sometimes we'll have it on the calendar just to be on the safe side. But this is one that's been chopping around a little bit. You know, it still seems to me to be on a downward trend since June. Not a very steep decline, but just seems to be some lower highs getting in there. We've seen some of these higher-end retailers beat up a little bit. The European name Richemont, just like Montblanc and a number of other high-end products. Yet just this morning had a poor report, so I'll be curious to see how these guys play out. Obviously, their big holiday season's the key for Goose, so their guidance will certainly be paramount. But what are you looking at this choppy chart? What do you see here, Scott?
Yeah, I was just about to say that. It's been really choppy here over the last 6 months or so. You do have that key support level right around, say, $50 or so. Right underneath there, you do have the 200-day moving averages around $47, $48. You know, you want to see new highs. This is a recent IPO from, was it early last year, I think it was, or was it just late 2016? It was late 2016, I think. But just you want to see new highs. You want to see this stock breaking out over $65 and just making that run into higher ground. That's really it. It's going to be definitely a gapper for sure in response to earnings. So you can just tell from the way the chart's been behaving.
All right, let's take a look at Baozun. Another one of these Chinese names. You know, it's an e-commerce front for a lot of U.S. companies, Nike being one of its biggest businesses. It's a name that I like, but obviously with the rest of the Chinese names in a firm downward trend. Recently was just trying to make a break above that trend line, but has since been chopped back down to 40 with today's weakness in the Chinese markets. Obviously, this one's got to hold that 34, call it 34 to 36, Scott.
Yeah, that's exactly where I'm looking. I'm looking all the way back to the March bullish gap, and that held in October right around 34, 36. So that's going to be a key line in the sand. Overall, I've been listening to you talk about this stock for probably a year or so now, and you sold me on the story, and I know we had a couple good trades in it throughout the last year and a half or so. But it looks broken now. It's back below the 200-day moving average. The longer-term uptrend is definitely broken here in October. It got rejected right around that $46, $47 area. You got the 200-day moving averages right around 48 and 49. Man, if this, I don't want to touch this stock unless it gets back above 50 at this stage.
All right, let's take a look at Macy's. That's a name that had been strong for a while going into that August earnings report, where they disappointed a little bit and broke that upward trend. We saw it slip back from the 40 area down about 20% to 232. But one that's been making a nice little move back higher here. I believe trend is actually still long this one, and that's through a lot of headwinds, right, Scott?
Oh yeah, for sure. You know, all of these brick and mortar retailers, they were one of the first groups that kind of held up pretty well in the latter half of October, and then they started to accelerate higher here in November. And you could say Walmart was a potential leader because that really kind of sidestepped the entire October sell-off there, taking on a more defensive role. But it's been maintaining that. Take a look at the chart of Walmart, and the stock has just been grinding higher.
Well, I'll tell you what, Walmart reports the day after, so why don't we take a look at Walmart then? So, both of them, another one that's been grinding high. We've been talking a lot about the consumer's targets, another one that's been not as strong as the others, but I just think that's the one bastion that people are going into ahead of earnings season, but I think that's what also makes this earnings week so interesting next week, too.
I'd say expectations are looking pretty high for Walmart here going into earnings, but same with Macy's and all these other ones. But again, you got the holiday shopping season coming up, and this is the typical time where you see these
strong jobs market.
Yeah, exactly. So they're definitely a leading group showing good relative strength, so I got to give them the benefit of the doubt that they're going to continue higher. Ross Stores is another one, Nordstrom's, JWN, RST, TJ Maxx, TJX.
Hold on, it's JWN's next week too, so's Dillard's, DDS.
Dillard's is a very low float name, so be careful with that one. That's I think can gap and move significantly. But Kohl's is another one, KSS. I think, do they have earnings next week?
They do not, but you know who does, who has certainly not been following the parade? JCPenney's.
Oh, yeah. Well, that's...
JCP. So that's one. I know it's enticing to load up at 135. I'm not interested in it, though.
Yeah. I don't know what to say about that.
You know what, though? It might not be a bad place to go and look for some deals this
some sales for the holidays. Cheapskate. Yeah.
Hey, trust me, I do a lot of my I look at the earnings reports, and whoever's weak, that's where I go shopping, because I know they got to get out of the inventory.
The closeout deals. Yeah, nice.
Oh, yeah, totally.
Nice. Costco, I don't know if they're looking pretty solid these days, too. So I know my wife and I do a significant amount of shopping there, and then even during the holidays, you always get some nice little styles and clothing every now and then. So
yeah, but a popular theme there. So let's take a look then, Scott, real quick at some of the tech names of interest with the October month end. Cisco. CSCO, of course. I've been talking a lot about the 5G and the new generation of orders for telecom equipment that's starting to cross. And Cisco's one that's been holding up pretty well under the recent action, too, not far off from its 52-week highs, right around that 49.50 area. This is a name that's just kind of, to me, over the last decade or so, just been kind of just chugging along, not doing a whole lot, and then it really kind of took off with that breakout over $33, $34 in late September, and it's been holding up pretty well this year. Choppy intraday basis, I don't really trade it at all. It just seems like it's just riddled with volume, what's the word I'm looking for? Just there's so much volume and so much thickness to this name that all the market makers just try to get in and out and scalp each other from it. But overall, from a technical perspective, a nice recovery effort here back above the 50-day moving averages, which is a pretty nice thing to see. My one concern would be what happened to Juniper today? Or this afternoon? So their investor day. I'm still in Juniper for anybody that's wondering. They had a three-year outlook on their guidance that disappointed.
Okay. Yeah, A-Net, Arista Networks, Juniper, and Cisco. I always watch those three.
Yeah.
Cisco's looking the strongest out of those three.
Yeah. Another tech name here, CloudPlay, NetApp, and TAP. Another one that's not all that far from its 52-week highs.
Yeah, it looks great. I like it. Trying to get back, holding above the 50-day moving averages, holding back above the recent resistance.
Margin calls for somebody late in
there. Yeah, those late Friday margin calls. Anyway, NetApp looks pretty good. I would say this is a good sign of relative strength, and I'm going to give a benefit of the doubt that it moves back up to those September highs around 85 or 87.
Okay, and we'll save the last name here for arguably the most interesting name, possibly the most important name, NVIDIA. NVDA, of course, fight and hold its 200 psych at the moment going into the print. A lot of caution going around. Obviously, we've seen the gaming stocks, which is a big end market for them, just get hammered this week on some pretty poor reports. AMD, which was in its space, got hit pretty hard on its report and its outlook. Didn't get any boost from cryptocurrency. And AMD, the canary in the coal mine for those gamers, when it reported and showed a weakness in the gaming sector. So this is one that I'm a little cautious on, Scott. You know, I love the name. I love the story long term. You know, we're talking about this one. It was back at that 100 level and stuff. So big runner for the markets, but one that certainly is looking a little tired. Let me ask you this too, Scott. A name like this, how do you think capital gains taxes play in?
And for who? Investors, or for the company?
Let's say you got into this thing in 2016.
Yeah, well, that's phenomenal. Yeah.
You know, and you got in at $30 and stuff, and you just kind of been riding it higher here, and you know, you kind of thinking, do I take that? Do I take that now, or do I wait and see what goes on with it? You know, for the next year. I mean, how does that play into this philosophy, do you think?
I would say if you got in early 2016 or at any point during that strong run-up, there's a good chance that you were a buy and holder. And when 2017 even confirmed it even more that you should remain long this stock. Now, I don't know if in that regard, I would say that you're probably you know, if you're holding a stock for well over a year or 2 years, there's a good chance you're just focusing on the fundamentals and not the technicals. Although the technicals have been ridiculously strong in this name for about 2.5, 3 years now. If you are watching the technicals, you did get that break below the 200-day moving average in October when price started collapsing underneath, say, 235, 240 area, 245 area, and that was the first time this thing has taken out the 200-day moving average in a couple of years. So that technically would have been a sign to start lightening up. I wouldn't be looking to, you know, if I have such a massive gain in any sort of stock that for such a long period of time, I would never, you know, sell the entire position out. But I would definitely have trimmed based upon the price action as of late. I would have taken a little bit off the table and maybe moved it into something else, and you know, bought myself something nice or something. But for the most part, I don't think there's going to be a lot of tax selling on this one. I think you still continue to hold on to it.
All right. And that is going to do it for us, Scott. A couple of feedbacks that I see here. We'll take a look at them and maybe jump back on and address them before. But going to close out this segment here, and we're going to repost that to the site. So, Scott, we can talk offline, take a quick look at some of the questions, and then jump back in the final 10 minutes here and address them.
Sounds good.
Okay, talk to you in a couple.